All right, if you're keeping an eye on the Greater Toronto Area condo market, you have definitely felt things changing. I mean, the old rules, they're out the window. That whole ownership frenzy is giving way to something new, what we are calling the rental wave. So, over the next few minutes, we are going to break down exactly what's happening for investors heading into 2026. And we are using a really deep analysis to guide us. So, what exactly is this great condo shift? Well, you can think of it as a total change in game plan. It's redefining who can come out on the top in this market. Let's take a dig right into the heart of this transformation. And here it is, plain and simple. The market has done a complete 180. That intense, buyer crazy ownership frenzy, it's pretty much over. What's taking its place is the powerful rental wave. The entire focus is now shifting to generating steady long-term rental income. It's a whole new playbook. But is this just hype, a few rumors in the air, or do the numbers actually back it up? Well, the data shows this really fascinating paradox. The market is somehow freezing over and heating up at the exact same time. Let's look at the proof. Okay, first let's look at sales, and wow, this stuff is steep. In major areas like Halton, condo sales have just fallen by over 25% compared to last year. It's pretty clear that cautious buyers and those higher interest rates have put a serious chill on the buying side of things. But, and this is a big but, that's only half the story. While sales are on ice, look what's happening to rents. They're climbing. The average rent in Toronto has jumped by almost 5%. So what does this tell us? It shows that while fewer people are buying, the actually demand for housing is as strong as ever. It's just all pouring into the rental market instead. And look, this isn't just happening in one or two spots. This chart shows the pattern and the same right across the GTA. Peel, Durham, Halton, York, Toronto. Sales are way down, but rents are set to climb. Now, this creates a really tough situation for sellers for sure. But a different kind of player, it could be a golden opportunity. So, if the game is not now all about rentals, where are the rental opportunities hiding? Well, this analysis points to 5 specific hotspots that are just perfectly set up to win in this new landscape as we head into 2026. Coming in at number 1 is Etobicoke's Islington City Centre. Get this, it has a projected return on investment or ROI of between 28 and 32%. That is huge. So why here? It's all about major transit upgrades and a ton of redevelopment that's basically creating a brand new hub and, according to the analysis, a rental sweet spot. Next on the list is the Vaughan Metropolitan Centre, the VMC. This one here is all about access and jobs. With direct subway line and more companies setting up shop in the area, it's becoming this massive draw for professionals who need convenience. At number 3, we have got Mississauga City Centre. It's really being supercharged by 2 things. First, infrastructure. That new LRT is a game changer. And second, it's a huge magnet for new Canadians, which means you get this incredible, reliable, and growing demand for rentals. In the number 4 spot, downtown Burlington. This one is all about lifestyle meets economic growth. The high-end live, work, play environment makes it a fantastic place to live. At the same time, there's just not enough rental supply going around, which keeps pushing prices up. It's a great setup for investors. And rounding out our top 5 is the Hamilton West McMaster Corridor. This place has 2 really big engines. You have got the steady, predictable rental demand from the university, plus this new energy from a booming tech scene. That is a pretty powerful 1-2 punch for a healthy return. Okay, so now we know where the rental hotspots are, but a quick question. How do you invest as a regular person? So what does it actually take on to jump on these opportunities and make them work for real? It is strategic edge. It really just means moving beyond the headlines. It's the difference between hearing, oh, Vaughan is hot right now, and actually knowing which specific building in Vaughan has the best layouts for renters and the lowest condo fees. That's the kind of detail that makes your ROI a good one, as it possibly could be. So, how do you get that edge? According to this analysis, it all breaks down into a 4-step process. You start with deep market intelligence to find the right property. that then helps you build a custom strategy that meets your personal goals. From here, you need clear negotiation skills in what becomes a buyer's market, all backed up by personalized attention to get you in the finish line. And all of this brings us to a key takeaway from entire analysis. With knowledge, strategy, and the right realtor on your side, 2026 GTA market offers a rare timing for long-term cash flow and future capital growth. Let's invest smart together. The key phrase here is rare timing. This isn't a market to be afraid of. It's a market that rewards a very smart strategic approach. And just so you have it all, the research and insights we have looked at today is backed by data. If you want more details, feel free to contact me. So all of this leaves us with one massive question. In a market where buyers are hitting the pause button, but rents are practically running out the door, is this the perfect time for the savvy investor to make a move? The data seems to suggest the opportunity is very real, something to think about. Thanks for tuning in.